All right, welcome back to Two Stupid Guys Trade Stocks. I'm Vinny.
I'm Dylan.
Today we're talking about AMC, the Ape Gang. Are they officially dead? Like, what the hell has happened to this stock over the last friggin' couple of months, huh? Jeez, man.
I'm just here for the comments. When I did this video, I got a lot of hate. So if you like this kind of entertaining stock market content, we are just two stupid guys trying to figure everything out. Give us a like and subscribe.
With that, we'll get to it.
Two stupid guys trade stocks.
The real question here is who's more responsible for the death? Adam Aron, the CEO, or the Grim Reaper? I'm not really sure.
I've never seen a community be so behind a stock when the CEO just continuously ruins everything you're trying to do. Like, it's like, we're not going to like offer another share offering. We're not going to do it. 2 days later, one more. All right, guys, we're done. We're not going to do it at all. I promise. 24 hours. All right, maybe one more.
Yeah.
Horrible.
Right? Oh, what a mess. So stock chart, not very pretty here. You had that little kind of spike up in the beginning of the year back when like GameStop was the thing. It's kind of flat for a little while. Then it had its own like independent moment, like, kind of in the sun, where it was a child, and a tremendous run there. And now what have we watched the last few months since then? Just this continual drift down, trying to find new levels of support. That's what it's done.
Pretty much, yeah.
Throughout this entire time period, what's been going on? Insiders of the company have been just selling the shares as much as they can, pretty much, while still trying to maintain the facade of actual confidence in the company.
Everyone's just selling everything they have, and the people that are still behind this are still thinking that they're getting back at all the hedge funds and all this stuff, when literally the people that you're backing are stealing the money from your wallet.
Yeah, crazy. You know what? As part of this Ape Gang movement, I bought a share. I still own it to this day. I'm down 64% on them at one share, which is pretty, probably one of my worst trades I think ever. If I look at
64%.
Yeah, minus 64%. But there's still this debate about whether or not synthetic shares exist and that sort of stuff. And frankly, like whatever, like market may not be fair. It should be fair, but you can't sit there and just watch your account balances evaporate and have confidence to stay in this trade when like there's no concrete evidence. You hear rumors and people come out and the woodworks occasionally and say like, oh yeah, this is totally happening. It's like, all right, well, sure, show me. I thought this was an interesting thing to look at actually with along with that share spike there, are actually this is Google Trends for that search keyword in terms of AMC, whether or not people are looking for it.
Okay.
Yeah. What do you think? It correlates pretty well.
I think it's dying. Also, for anyone who's like immediately triggered off of this, saying that you shouldn't be holding a stock, one, if you have watched any of our videos, I've done this with MoviePass like 4 years ago, and all you do is just learn from it. That's it. That's all you can do.
Yeah, that happens. AMC, for those people that were actually legitimately in like early, they're up like still 800%, which is phenomenal. But
if you got in at like I think like a decent amount of people bought after the first one, like the $10 to $15. Once it loses 15, that's a massive support for the stock.
Yeah. We'll see. I don't know. It's holding 20 for right now. I don't know how long it's going to continue. But these are the kind of headlines you're seeing of lately. Sinking to 8-month low. CEO sells more shares. Here's the CEO running off with was this $42 million over the last 3 months. Now, this was a planned sale according to his kind of retirement account through Chase, that to diversify his assets. Sure. I mean, yeah, it makes perfectly logical sense, but he still is demonstrating the fact that he thinks it's overvalued, in my opinion. But I'm just a stupid guy on the internet.
It's not good.
Yeah. He's not the only one. The CFO, the guy that actually understands numbers, sold all of his stock.
Oh my God.
Well, almost all of it. All of the shares that he could sell. Put it that way. It's very interesting that they have these other shares that are part of their compensation that are not vested yet, meaning they're not eligible to be sold yet. So they still count as owning those, right?
This should be, if you're chief financial officer, let me take this back. Obviously, all people in a C-suite will sell some at some point, because especially if they're really stock-based compensation, they need liquid cash to live. So some shares are fine. If you own like 1.5 million, you sell 50,000, once every 6 months, that's fine. This is all of your shares.
Everything that was available to him.
Everything that you can possibly sell and are allowed to, you sold. That's a problem.
Yeah.
It's not good.
How is AMC trying to fix this? This is brilliant. It introduced a plan to require the CEO and CFO to maintain certain number of shares based relative to their salaries. Yeah, a minimum required. So if you don't have confidence in the company, you have no choice.
Who approved this?
It's not approved, but this. I'm sorry, it was approved by the board. It was Aaron, the CEO, that announced this, setting a minimum so no one else can offload everything.
So he sold a bunch of shares, then proposed this?
Well, he would still meet the guidelines. The CFO would still meet the guidelines because they're allowed to count shares that aren't vested as part of their share ownership in the company.
This guy's such a scumbag.
Yeah, I'm not a fan of this. I think this is a real underhanded move. It shows complete and utter disrespect for shareholders, at least in my opinion. But what am I? Yeah. So this is what they're saying, is that he would still, walking this fine line. And this is actually from a Wedbush analyst, where they're trying to offload it because they know it doesn't make sense from a financial standpoint, while still trying to have this facade of confidence in the company.
Yeah, no, this is terrible. I can't believe that they're still at $20. I feel like, one, I don't think this is making enough headlines, because I feel like if anyone was like hey, screw hedge funds, let's try this thing, you should see this and immediately run. Now. That's a problem.
Yeah. I mean, definitely not that. I wanted to actually touch on this article, though. This article, the valuation is really where it makes good points. Ticket sales are up. Finally doing some solid numbers since 2019. Still not surpassing those levels, but they've come back. People are going back to theaters a little bit. We have this Omicron wave going on right now, which at least personally, it looks like my local area is kind of crested already. So we're going to be hopefully on a downtrend here. But the thing that really pissed me off when I read this fucking article was when you get to the valuation. A 2 to 3% free cash flow yield. What does that mean much to you? In terms of how much the company will be worth?
Are they trying to hold on? What's their number? Because if this is anything above $3,
no, he's saying it's got upside. He's saying the company should be worth $15 billion here with 3% free cash flow yield. To give you a sense, so this is AMC. This is a dying industry, and this is a company laden in debt within that industry. And he's arguing for 3% free cash flow yield. That free cash flow yield is less than what Facebook is getting, growing at 30% a year. This article pissed me off. This guy, what's his name? Mark something, Mark Hake. I never heard of this guy before in my life, and he's probably never heard of me. He definitely never heard of me. But how can you come up with asinine numbers like that?
It's definitely never heard of me.
Yeah, it's complete garbage. Like I said, this is a company that is in a dying industry. So, for instance, I still own Molson Coors. Molson Coors trades at about 10% free cash flow margin as far as that goes. So that would put this company at about 4.5 billion, meaning that it has about another 60% downside from where it is right now, putting it at about a $4.5 or so, per share price.
Right.
I'm sorry, about $10 per share price. Yeah. Even that, I know. I'm giving it a lot of credit. Okay.
There's a lot of things that have to go right to be $10 a share for this stock.
Yeah. This guy's over here arguing for it has upside between
upside at the current price.
Yeah, he says I have between 30% and 95% upside potential.
So he thinks that essentially the stock's solid value is around $35-ish.
Yeah, sure. Yeah. So I mean, we called ourselves stupid guys, but apparently there are people out there that are even stupider.
Oh man, that's pretty rough. That's really bad. That's not good.
All right, guys.
Anything above like $4 is pretty wild. Granted, okay, I'll give them $6 because they raised a bunch of money to help pay off debt because of this whole thing, but they still don't have more money incoming, so it's not really solving the problem.
Yeah,
it just bought them time.
Yeah, all it is time. That's all they have.
Bought them time.
Yeah. All right. I don't know, man. It's just there was a Regal Theaters by me that closed down entirely. Like, they ripped the name off the building. It's done. Not coming back. Like post pandemic.
Yeah, you live in the woods though, so
kind of.
They were selling to like 9 people in the first place.
They were, yeah. I had some good memories of that, man. I had some like dates when I was like 12.
I live in a city. There's still a lot of theaters.
All right, man. I couldn't believe this valuation, and also like the fact that the CEO and CFO just kind of openly saying like, we have no confidence in this. As far as that's my reading of what they're doing here, but some people still do. Hashtag Ape Gang.
In the comments section, if you guys want some free entertainment, just throw out some solid numbers for Vinny to read on any stock you want that he's heard of with a really, really good valuation. Like, I want to see GameStop $400 with some evidence because I want to see Vinny go off on comments. That'd be great.
Sure.
It'd be really fun for me.
All right, guys. I'll catch you in the next one.
Later.